Welcome to our next slide. We are explaining our last indicator, which is Fibonacci retracement indicator, right? So the question that you may ask, what is this fence indicator? What does it do? So the main thing that you need to know from this indicator is so easy. You need to know that Fibonacci retracement it draws what you call levels, right? These are the levels that we are talking about. So these levels are horizontal lines that indicates the possible supports and resistance levels, right, where prices could potentially reverse in an uptrend or downtrend. So first of all, what you need to know when you're using indicator, you need to know that you're using indicator in an uptrend. If you see a pair that is going in an uptrend or a downtrend, that's where it works perfectly, right? So it doesn't work in a ranging market, it works in an uptrend or downtrend, right? So we are saying if this pair is moving in an uptrend, it won't go in an uptrend, but it will have what we call dips, or it breathes, or it retraces, so it moves like this, then maybe it go like this and this, going up, right? It doesn't move in a straight line, it's not a car, right? It do what we call retracement, like what is happening with Bitcoin, like it's retracing, it's having dips, you don't know if it's keep on moving. But what we are saying, if something is railing up, it breathes, right? It retraces, it raises up, retrace, then it moves, right? So we're trying to capture these potential or likely supports. That's what we are trying to say. We can't buy at any, of course we are knowing this pair is moving upwards or downwards, right? So we can't say, we can't just buy or sell at any point, right? We need to take advantage of low prices. Like I said, is professional traders, we don't just buy at any price, we buy at low price and we sell it high price, right? So it works best when the market is trending, it's either uptrend or what. So Fibonacci retracement levels are considered as predictive technical indicators, right? Since they attempt to identify where the prices may be in the future. We know that it's railing up or it's railing down, so we are anticipating this price will go in this kind of direction, right? So in order to find these Fibonacci retracements, right, levels, you have to find a recent significant, very important concept, recent significant swing highs or swing lows, right? Significance, very important. As I mentioned that in this course, I will explain why it's important to understand, why it's not important, right? Kind of things that you need to know, or things that you really need to grasp, right? So it's very important that you need to identify what called recent swing highs or swing lows. Then for downtrends, right, click on swing high. For downtrends, swing high, drag the cursor to the swing low. For uptrends, do the opposite, right? So we are saying this one, this is a picture, as you can see. So as you can see, the most it's an uptrend. First, this thing is railing up, right? So the second step is to identify swing low, because we are saying it's an uptrend, so which means it's supposed to have what we call swing low and swing high, right? Because it's an uptrend. So our swing low is this and our swing high is this, right? Or you can put it here, but for now let's consider, I'm saying we have seen the markets is here. Let's say, just imagine that this price changes were not there. We have seen this, that's what I'm saying. So our swing high is here, swing low is this. So click here, do this. So I will show you, right? So let me show you. Can you see? This is our first example. So what is this pair? It's Euro JP, right? JPY, Japanese yen, right? In a 1 hour time frame, as you can see. So where do you get this Fibonacci retracement indicator? So you come here, you come here. These are different tools, as I said. So you come here, you click, is it here? No, sorry, these are tools, right? So just search. So here, sorry, very sorry. So these are tools, right? So you come here, the second one. So just search if you don't see. So this is what you call Fibonacci. It should be written what you call Fib retracement. So you should calculate, you should click Fib, right? I've clicked. So if you come and click here, this is what we call our swing high, right? Let me delete and show you the whole trend. I'll delete this. So if you click like this, can you see this thing is rolling up? It's rolling up. It's rolling up. Right. So this is what we call. So let's first identify our swing is an uptrend. That's the first thing that you need to identify. So let's identify our swing low, then we identify our swing high. So I'll just draw here. So this is what we call so where can I get? I want to, okay, let's use this. I want to illustrate. This is what we call our swing low, right? Right. So let's go and identify. This is our swing high. So can you see our swing high? It's here. Here. This is our swing high. Right. It's very simple to identify. It's 1 hour. So let's draw it. So if you draw this, I said where the first thing, this was swing low, this was swing high. It says that this is an uptrend, so it's useful to use what we call a Fibonacci. So where can you find a Fibonacci? So you come here, a Fibonacci, you find it here. So you just find where it's written Fib retracement, and you click. Then you come here, you click on a first thing, you click on a swing low, then you drag it like this. What I'm doing, drag it up, up. Then you come here. If you reach swing high, then you move it a little bit this side, right? Then you click, right? Just do this. Just click, right? So then you just delete this. So if you want to move it this side, you just move it like this, right? But it should not exceed the high, right? It's like this. So let's explain. So the first thing, that's how we do it. So before we go and analyze what, there's something that I need to explain here. So usually I personally, I love to use what we call a pyramid technique, right? So this is what we call a pyramid. I want you to understand, very careful with this pyramid, what's happening. So a pyramid, what's happening, there is what you call, let's say here for Fibonacci there is 0%. There is 0%. Here there is 0. Here there is these are levels of Fibonacci. There is 0%, the first level. Then the second level, it's 38. So the question is, what are these levels? I explained about Fibonacci levels, and I said these are likely supports or resistance that will happen as the market is rolling up or down, right? So the second one, it's 50% level. So we are saying why I'm saying 50% level. I'm saying 50% level because the likelihood of a market to bounce at this support is 50%. So the another one, it's 61.8, right? The last one is 100%. So let's summarize. I'm saying 0%, 38.2, 50%, 61.8%, 100%. So we are saying the likelihood of a market that is rolling upwards like this, right? If it moves in an uptrend, right, whether it's an uptrend or downtrend, if it's retracing, bouncing in these likely supports, right, it's 0%. The first level is 0% to bounce at this, right? So the second one is 38.2. So the probability of the markets of bouncing at this level is 38.2%. So this level is 50% and so forth, right? So what are we saying? We are saying the first one, this 38.2, it shows that the market is in a strong trend, uptrend or whatever. It's a strong trend because it's either uptrend or downtrend. The 38 is a normal trend. If it dips or it retraces to this, it shows this is a normal trend. If it dips to 61, if it moves like this very massively, it shows that this is a weak trend. So we are saying if it moves like this, then it goes to 61 level, it's a weak uptrend. It shows it's a weak uptrend, right? So why is it I'm explaining about this? Because I personally use what we call a pyramid technique, right? So I usually love to work with these three levels. So I want you to understand about these three levels. The first one is a strong, normal, weak. So we work with these three levels: 38.2, 50, 61. As you can see, right, this is 38, 50, and let me use another color. I'm saying this is 38, 50, and 61. I usually like to use this technique, these ones, right? So let me go and show you back here. So we've drawn our Fibonacci, right, retracement, as you can see. So let's say the markets, you identified that it was railing to this position, right? You have drawn your thing here. It went to this. You have your swing high, it's here. All right. For now, let's say you identify this uptrend here. You want to trade it, right? So what do? I usually focus, as I said, with this level. The first one is this one, right? And I said the second one is this. The first one is 38. The second one is this, and the third one is this one. So how many levels do we have? 1, 2, 3. We usually work with 3 levels. This one, 38, 50. So how do you use these levels, right? So what I usually do, we know that it's an uptrend, right? So which means we need to go long, right? You don't want to go against the markets, so you need to buy at a certain point, right? So do you need to just buy anyway? If the market, let's say you identified it's here, right, it's here, do you need to just buy anyway? You need to wait and wait until the market retraces and buy at a low price, as I said, right? So what I usually like to do is I come here and place a position at 38 here. I place what you call a quarter of my position here. Let's say here, quarter of my position here, another one here, another fifth here. So there is quarter plus quarter, 25% of my position here, another quarter here, which makes up to half of position is in between 38 and this one, this left. So half of position is here. So I said 25%, you place it here, another 25, then your 50 position here. So I want you to understand, very careful. So if you place your 25 here, then your market goes against you, right? You buy another 25 again, right? Then if it goes against you, you buy 50%, which makes up to your total 2% of a trade, right? I'll explain about position side. So if it goes, so if it passes another level, you buy or sell. So if you buy here, your 50%, while you are keeping this, very important concept to understand, you are keeping this, you don't get out of the markets if it goes against you. You keep hold your position even if you are losing, right? Follow protocols of your strategy, so you don't move out of position. If it comes here, buy another 50%. Then your 50%, if it comes to another level, I say you sell or buy. So we bought here 50%, you come and what? Sell that 50%. Now it's in this level, which means if you bought this 25, which means if it moves in this direction, let me take an arrow, very important, you need to understand this. If it moves in this direction, right, which means your position here, which is 25, you start to gain in profits, you start to be in profits. Then if it reaches this, you sell that 25, which means that 25 is now on zero. If it was a negative, it's now on zero. If it comes back, you wait, because we are not selling, because this is an uptrend. So some people will be like, no, I want to sell. No, we can't sell if something is an uptrend. Your trend is your friend. If it's moving upwards, you need to go long. If it's moving down, you need to go short, right? So if it comes back here, you buy another 25, because this level, which is a normal trend, what we call a normal trend, the 50%, it's a normal trend. This is a weak, this is a strong. So if it comes back to same level, what we call 50%, always buy 25%. So you buy another 25, you sell if it reaches this level. If it hits this level, you sell. If it comes back, you buy another one, right? But if it comes back, you buy 50 again, doing like this. Each end level is its portion of size. So if it comes another one, you buy 25, you sell your 25 position, which means this position, which was in 25, is now getting profits. So if it passes this level, you sell, which means your positions at the end of the day, they are here. Let me show you. They are here. They are here. What I'm saying, can you see? So I'm saying your positions, they start at 50%, going up here. Okay, let me cover the whole way you exit. So you can't buy and wait for this, so you are trying to capture every movement, right, so that you utilize your capital. So your positions are in around 38 and 61%. So that's what you follow, always follow, right? I hope everyone has understood my this concept, right? Always find in trending markets and follow instructions. That's Fibonacci retracement level for you. I hope everyone has understood. Let's move to our next slide.